Here in the Goldman House account, while they were in the news saying that gold has no role, you see 6,220 contracts delivered to Goldman Sachs. And of course, JP Morgan, who's saying they don't see any fundamentals. Of course, shockingly, for some reason, they show up on the stopper list, taking in 4,000 contracts. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Handsome Dave Kranzler. You're going to get picked on today, Dave.
Just stop.
He was a little jealous that I said Rob Kientz was the smartest analyst in gold and silver. And a few other things I might add. So, Dave, today Silver Chris is going to settle the score. I mean, dude, you have gold is money in your signature. Nothing.
Is that what you go by now, Silver Chris?
You have nothing about silver on your Facebook profile, on the website. There's gold is money everywhere. And
is that what you go by now, Silver Chris? Are you going to get vanity license plates to that effect?
Maybe.
That should be your license plate.
Well, we are working on, we have a phone number for our Miles Franklin sales, and we are working on getting silver, like 1-866-9 silver. In addition to our silver figurines, which are becoming a hot pre-order, where Dave, can you imagine when you have your helicopter Ben 1 ounce silver figurine sitting on your desk, spewing cash out at you at all times, so you can pick up more mining shares? And speaking of which, Handsome Dave, before we get started,
stop it.
Today's episode is sponsored by K2 Gold, a gold company that just got the permit to start drilling on their Mojave project. Interestingly, came from Great Bear's Chris Taylor, who passed that project along to them. And to get more information about that, we will have a video coming your way at the end of this one. And since they did bring you this episode, please check that out. I think you'll find it interesting. And with that said, Mr. Kranzler, okay, you're the smartest investor who's ever been able to spell gold. We'll make some t-shirts up, your new title. How are you today, sir?
I was doing okay till I got on here with you.
Well, then, all right, man, you don't have to get cranky. We all know why you're upset.
Why am I upset?
Well, folks at home, to explain the backstory here, Dave had a little bit of a tough week because after reading that Goldman Sachs says gold has no role in a portfolio of wealthy clients, and additionally, Dave, he sold all of his gold this week because Dave, I know as soon as you read that JP Morgan said there are they actually said there's no fundamental. Oh yeah. Analysts see the precious metal reaching a high of about 2,000 ounce amid a move that is not supported by fundamentals. I guess JP Morgan has been skipping the Fed press conferences. So anyway, with that said, Dave.
Wait, I don't understand something.
Yes, sir.
Didn't Goldman just come out with a strong buy on gold?
Well, it's interesting.
Like a week ago?
Yeah, they did, and I'll pull that.
So now all of a sudden, in the same breath, there's whatever manager that guy is. What kind of manager is he?
She was a portfolio manager who thinks gold is overpriced and has. We discussed this the other day, but it's so special. Our view is that gold is only appropriate if you have a very strong view that the dollar is going to be debased. Just.
Going to be debased. The Fed balance sheet in the year 2000, when W took office, was $800 billion. Okay, it's over $7 trillion now. I mean, if that's not debasement, when is it going to be debased? When W entered office, the price of gold was around $250, right? Now it's $1,950, actually higher today, right? So it's not that the price of gold went up. It's that because of all the monetary debasement, it takes more dollars to buy an ounce of gold. Pretty much an ounce of gold will buy you the same thing that in right now that it would have bought you in the year 2000. It actually probably buys more of those things.
Well, Dave,
for instance, let's look at the gold oil ratio. Perfect example.
That is why you're the...
Get a hell of a lot more barrels of oil now for an ounce of gold than you would have in the year 2000. So I don't understand when it's going to be debased. Does that mean that, you know, we're about ready to go Zimbabwe or Weimar on the money supply? I mean, I can't even pronounce that guy's name. And you're going to, after Goldman has one side of their firm come out and say, buy gold, it's cheap. He says it has no role in a client portfolio. Here's what I say.
No.
GLD has no role in a client portfolio, right? GLD is a derivative. It's not gold. GLD Vault probably doesn't have anywhere close to the amount of physical gold unencumbered that it claims to have on its website that everyone points to. It says, oh, gee, look at all the gold they have. Those are the same people that point to the Fed's balance sheet and says, gee, they got 8,100 tons of gold. Got news for you. No, they don't. They may have no gold as far as we know, right? So GLD has no role in a client portfolio. Here's what has role in protecting a wealthy client's wealth. You take some of your money away from however you say that guy's name, and you remove it from the system. You go to your favorite coin dealer. It might be Miles Franklin. I don't know, whoever you like to use, and you buy bars of gold and bullion coins, and you also mix in some silver bullion coins.
Yeah, right now, there we go.
You take that and you find a great place in your house to hide it and keep a loaded weapon nearby in case you need it. That has a role in a wealthy client's portfolio.
I hear you. And well, maybe part of the explanation is interesting because if you look, we got first notice day yesterday. Here are the gold deliveries. Now, you see here in the Goldman House account, while they were in the news saying that gold has no role, you see 6,220 contracts delivered to Goldman Sachs. And of course, JP Morgan, who's saying they don't see any fundamentals. Of course, shockingly, for some reason, they show up on the stopper list, taking in 4,000 contracts of gold. So Dave, is that... Now, I know Goldman Sachs would never sell a shitty deal to someone, right?
How about the fact that you sold hundreds of millions of that deal after your people knew it was a shitty deal? Does that bother you at all?
We know that. Carl Levin made that clear.
Tells the sales force the top priority is Timberwolf. Your top priority to sell is that shitty deal.
So, oh, you mean where they plugged their clients with subprime mortgage-backed paper and then took the short side of that bet through derivatives?
Trying to sell.
Okay, you're trying to sell a shitty deal, and it's your top priority. Come on, Mr. Sparks.
Well, Mr. Chairman,
should Goldman Sachs be trying to sell, and by the way, it sold it, a lot of it after that date, should Goldman Sachs be trying to sell a shitty deal?
Oh, come on, Dave. An investment bank would do that.
So wait, JP Morgan took 4,000 contracts, so that's what, 400,000 ounces of gold? By my math, that's over 10 tons.
But gold is not going to break 2,000, and it's not supported by fundamentals, Dave.
Here's the thing about those numbers. You know, and I had this discussion with Chris Powell earlier today. First of all, those are the reported deliveries. We don't know to what extent gold actually moves around in the vault, right? And so those numbers, they really are, I call them hearsay numbers, and until we get to the point where the people who are taking delivery of that gold start to remove them from the vault. Now, I mean, who knows what JP Morgan's got going on the other side. I mean, they may owe that gold via some of the OTC derivatives they've underwritten. They may owe that gold. That may be gold that they leased from the BIS or borrowed from the BIS and need to give. I don't know. So the thing is, the thing about the world of gold, the precious metals, and I guess there was some sort of admission in 1999, and I don't. Chris Powell alluded to it earlier today. The gold market has been intentionally made as opaque as possible. And I'll just point out that if you remember when they rejiggered how they do the London fix, right? They cleaned out, all the scoundrels that were part of the fix committee and replaced them with new scoundrels. And they said, we're making all these changes to make the LBMA a lot more transparent. When in fact, what happened is they made it a lot less transparent. And as a point in case, the results of the AM and PM London fix used to be released about an hour after the fix was done.
Yep.
And now they don't release the results of either fix until very late at night. Now, how in the hell is that making the market more transparent?
Well, it's kind of funny in the sense, funny, not funny, amazing, because I've been thinking about it, how basically you had the dollar was backed by gold, and then Guns and Butters, LBJ, and we hear a lot about how we left the gold standard. Interesting, we left the silver standard right at that same couple of years prior, where LBJ.
Well, the dollar wasn't fully backed by gold after starting with FDR.
Right. And
the public, the citizens of this country, the people who technically own this country could not exchange their dollars for gold after, when was it, 1933 or whatever year it was, 34.
Yeah.
It's been so long since I've even looked at those issues, I forgot the exact dates. It's not important. So, and then they further removed the backing of gold with Bretton Woods. And then it became unbacked all by itself as foreign governments started turning in their treasury bonds for gold at the treasury. And it was de Gaulle who figured out that the U.S. had issued more treasuries to foreigners than they had gold in the vault to back them. And he was going to make a run for it all. And that's when Nixon closed the gold window.
Well, why let that stop you? And that's, I guess, what I was getting at, where it's interesting. Basically, there was a drain on the gold then, and to continue manipulating that, Nixon takes us off the gold standard. Then I believe it was 1974 when they invented the COMEX contracts. And I point this out because, we're sitting here saying, well, silver went to here in 1980 and 2011. Yet, as I've really been thinking about it, trying to put it into context, I mean, the thing was being manipulated for decades, even before 1980. So, and again, we saw things get popped because you raise margin requirements. Okay, factor in if Paul Volcker was going to actually raise interest rates. But it's interesting to me that we really have no idea. I mean, we've never really known anything resembling a true fair market price of gold. And it's interesting when you think, how should gold really be priced? I think the simplest way is that if you just measure it relative to the dollars, and those numbers get pretty big quickly. Although, Dave, I have a question for you. At the same time, we got reports from the big boys in the finance industry saying gold isn't going to cross 2,000, while they simultaneously take deliveries of massive amounts of gold. Here we see interesting gold chart of the last couple of days, where a couple of times it gets close to 1980. Dave, I wonder if you would call this a spoof. In fact, it was interesting when Andrew Maguire first contacted the CFTC back in 2010. He wrote him a letter telling them how the markets would play out during the labor number. And he even mentioned that often what will happen is that if the number is bullish for metals, they'll let people get on board, drive the price up, and then whammer, it just clobbers down. What do you make? I know it's, we're somewhat guessing, but do these seem natural? So many people see this, and it'd be great to get your opinion on what you think when you see a chart like that.
Is that a rhetorical question?
Would you like it?
So, here's what's funny, because you're showing the chart of spot gold. It's the Kitco derived price of what it refers to as spot, but it's not spot.
Yeah.
It's an amalgamation of the previous London fix, and then they use like some derivation, of the COMEX futures price curve. And so that's pretty much it. It's a little more complicated than that, but that's kind of it in a nutshell. Forget what day it was, but it was right after JP Morgan had said gold's done at 2000 or won't get whatever. So the December contract actually hit 2000 and then wham. So the price spike that you're showing, well, I don't know if that was today, but the same type of deal the other day. The December contract hit 2000 and then they spanked it. So yeah, I mean those fishing line drops, that's the footprints of manipulation. And I mean, it happens all the time in the gold market. I mean, we had a mini one this morning right after the COMEX open. They let the price of gold spike up and then boom. So, and it's, as trading of everything has gotten more, more controlled by or more influenced by the hedge fund algorithms and the HFT technology, it's made it actually easier for them to manipulate around those programs. And that's a lot of what you see in the gold market. It's not necessarily JP Morgan just, dumping bail loads of contracts into the COMEX trading system and keep pushing it down that way. What happens is they'll spoof the market, or they might even, at whatever point they decide to do it, they might even, just start off the process by dumping a big slug of contracts, knowing that they're going to trigger the hedge fund stop losses that are set, pretty much automatically by the algos. So, and that's really what it is. It's an exercise in what they do is they sit there all day long and try and figure out where the stop losses are set, and then they target those positions, and then it becomes automatic, because once the stop losses are hit, the algos automatically sell the contract. So, yeah, I mean, that goes on every day.
And for anyone who's saying, oh no, he's just saying that, Dave, I might add that I asked that exact question to Bart Chilton, and he gave that exact same answer. And
that's a guy that was sat on the CFTC for many years. So if anyone has seen, has taken a peek behind the curtain, it's him.
Yeah, he's taken more than a peek behind the curtain. He even said he was so bothered by what was happening that he had, he went through the process, got the definition of what constitutes manipulation changed, and had that standard been in place, he in fact thought he was going to be able to get a conviction of JP Morgan as it was, but certainly with the new standard in place, he felt that they would have been convicted of market manipulation. And, if somebody's wondering, well, maybe they're just silver bugs making this up, might add here, as you have another this is from last year, but another JP Morgan precious metals trader pleads guilty to spoofing. And first of all, placed not a few, thousands of orders that he did not intend to execute. But look at that, gold, silver, platinum, and palladium. Dave, I know you don't dig into the platinum group metals as much, but I've found that certainly a lot of these unusual things happen there. Again, it's that same time period, 2007, 2016. And Troons earlier resigned from his position, said he learned to spoof from more senior traders, spoofed with the knowledge and consent of his supervisors. And they've all said that same thing, that it was widespread practice in the firm. So, I mean, we don't know the exact details, but it's like you see these investment banks come out and say, oh, there's no fundamentals. I even saw one gold analyst say, we don't see gold rising unless interest rates stay low for an extended period of time.
You know what's funny about that? And Adam Hamilton did the statistical study, and I don't read his stuff anymore because it's too long-winded, but he's got good information. I used to read his newsletter all the time in the early to mid 2000s, but he went and did a study using actual data, and gold's periods of best return since the year 2000 have come when the Fed is getting ready to go into an interest rate rising cycle, and as rates are going up. And the reason is because the market sees the Fed as telegraphing that there's going to be a big increase in inflation, and that's why they're raising rates. And so one of the natural things you buy when you know there's going to be a lot of inflation is gold. Well, there's already been a lot of inflation because inflation is the inverse of currency devaluation. And we've had currency devaluation going on for quite some time, but it's been going on in spades since 2008.
Yep. And certainly that was the other thing from the Bart Chilton interview that I found stunning, and is chapter 16 of The Big Silver Short, how he confirms JP Morgan took over the bear position. He said it was over the limit. He gave them a waiver of a couple of months to make it smaller, and he was furious because they came back, they had made it larger. This is the exact time when silver drops from 21 to 9 days after that deal, while you had physical dealers couldn't get any silver. So yes, I certainly agree with what you're saying. It doesn't matter whether I agree with it. The facts clearly, notate everything you're saying. And I guess final question for you today, sir, is that, all right, as of Friday morning, we're at 1972 on the Kitco. Is JP Morgan and Goldman Sachs right that 2000 is the top? Or I would guess that based on the chart and the things you said about the way the markets are positioned these days, maybe it'll take a while, but it's like it keeps getting knocked down from 1980 and the price keeps grinding back up. Are we going to see when gold finally crosses through 2000? That's when the party starts at a whole new level?
Get your party hats out, get them ready. Actually, now that I think about it, and I meant to mention this earlier, December gold touched 2000 early this morning. If people want to pull up their gold, you can actually go to the CME website and pull up the December chart for gold. I think it's a 10 or 15-minute delay unless you pay to subscribe to the site or whatever. It's not worth it. And it ticked at 2000 right around, well, I'm looking at a 15-minute chart, so I don't know exactly when, but sometime between 3 a.m. and 3:15 a.m. East Coast time, the December contract hit 2000. So the December contracts hit 2000 twice now in the last week, and last 6 or 7 trading days. Someone's got a sell program in the December contract at 2000, and I guarantee you it's not hedge funds and bona fide investors. It's one of the banks or a few of the banks. And to answer your question, it takes a long time to push through round numbers. Look how long it took, and I don't have the number off the top of my head, but it seemed like it took forever for gold to push through 1900, right? Mm-hmm. I don't expect it to push through 2000 right away. What I've said is, and again, as you know, I hate putting price targets and time frames together in this market because it's so manipulated. And we just have 2 extreme examples in the last week where it's been prevented from going over 2000 on the December contract. But I think on your show, I said maybe 3 or 4 weeks ago, I said, I think there's a good possibility that we'll see gold over 2000 by Labor Day, if not sooner. And I think it could happen. I think we're basically a chip shot away from, getting over 2000, staying over 2000. Now it took, and again, I don't have the number off the top of my head for how long it took, but it took, months for gold to push through 400. Back in late 2003, early 2004. So there's certain, the round numbers are seen as, barriers that they put in place, and certain round numbers are, more of a milestone. And so they defend them more vigorously. And it was funny because, and I've said this before, I think on here, Robert Prechter came out when gold was, just below 400, and it's late 2003 or something like that, and said that everyone should know who Robert Prechter is. He's basically the I don't know if he's the grandfather of the Elliott Wave, but he certainly was the one who popularized it. But he said gold was going to go to 50, go back to 50. It wouldn't get through 400, it'd go back to 50 and stay there forever. That's a paraphrase. It wasn't exactly what he said, but and then I don't know, probably within a few weeks, gold pushed through 400 and never looked back. So, they're going to put up a fight at 2000 because it's a real, it's a real milestone mark. So, but once it gets through it, the sky's the limit.
Yeah, I feel like we're at that point in time where people can look at, what happened in the past or what's the normal rate. But I mean, when you look at what's happening in the world, the reported numbers of metal that are being delivered, I personally feel like we've entered that phase of time where almost anything is on the table. One last thought to leave you with, Dave, or question for you. In 1980, do you know how much time elapsed between, on the way up to $50 in silver, from the time silver crossed through $24 an ounce until when it hit 50? Do you know how much time there was in between there?
Oh God, I used to know. It's been so long since I've looked at those points of trivia. A week?
It was about a little bit over 3 weeks, from December 24th to January 18th. And despite the fact that JP Morgan just no fundamentals to support what's going on, just as a hoot, pulling up the front of CNBC, coronavirus relief sputters and runs out. Mnuchin's already talking about new stimulus packages. Dr. Fauci saying coronavirus is so contagious. Apparently he made a comment shortly before he extended the lockdown in some medical journal that no one reads, saying it was the equivalent of the flu. So some contradictory.
I mean, what, this guy, he doesn't base any of his judgment calls on science or facts. Someone feeds him this information. It's been so long since he's done any research or spent any time in a lab. He's been a government bureaucrat for 40 years. So he's got guys who are telling him this BS.
Well, I mean, wouldn't that fit the pattern of government? And again, I'm not a biologist, but I just sit here, listen to one doctor after another who's standing up, making press conferences, saying that things are not being presented clearly. Although, rather than reading CNBC and all this stuff, fortunately, for just $20 a month, you can get the Mining Stock Journal. Dave, I'm getting emails, a couple of weeks saying they love the journal, they've signed up, they're finding it helpful, and I appreciate you actually had 2 silver stocks in there covered that I've been talking to. So, folks, on investmentresearchdynamics.com, you can get Dave Kranzler, smartest person ever in the history of the gold markets. But he's going to break it down and continue expanding on what he shares each week in the interviews. And for $20 a month, Dave, I think you got to raise the price on that. But anyway, snap it up while you can now.
Appreciate that, Chris.
Well, I appreciate you. And not to give your competitor a little boost, but I know you're competing with Andy Scheckman in View Count each week. And if anybody wants to know what's happening on the interesting physical market update, that is coming your way now.